morning. This is Horizon's Middle East and Africa, our top stories this morning. Mark Carney wins the race to become Canada's next Prime Minister ahead of a general election set to be dominated by how to deal with President Donald Trump. China's consumer inflation drops below zero. Sluggish consumption also sends core CPI negative for only the second time in more than 15 years. And Syria's government forms a committee to investigate violent attacks, which an NGO says has killed more than 1,300 people in the last 3 days. Well, happy Monday, everybody. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersachi back in Dubai. Well, these markets have not been doing too well the last couple of days, seen a real risk-off tone, and that is continuing this morning. We had the S&P end the week more than 3% lower last week, so still a lot of selling going through. A lot of focus on Friday on that NFP number coming slightly lower than expectations, but the market turning their attention to the fact that the unemployment rate has moved slightly higher and also some downward revisions for the prior month. So that sort of set the tone. And today you can see that S&P futures are also leaning towards the red, down 0.4%, as we as well this week head into another week of potential tariff announcements, the potential imposition of tariffs on steel and aluminium, and concerns surrounding the trajectory of the U.S. economy. So that is something that's setting the stage for us this week. But of course, a lot of focus still on the price action in the front end of the yield curve. Two-year yields now trading below 4%. We're down another 2 basis points today. The market is pricing in 70 basis points worth of rate cuts for 2025. Remember, it wasn't that long ago that there was only one rate cut priced in. There are now almost 3 rate cuts priced in to the front end of the yield curve. The Fed Chair Jerome Powell spoke on Friday. He did signal that they're not in a hurry yet to start reacting to some of the uncertainty surrounding the U.S. economy, but paying close attention to it. Take a look at the energy complex as well. Brent slipping below $70 this morning. 69 is where we're at, down 0.5%. We slipped around 2% in trading last week. We're down 7% in the last month. Again, here, concerns about the trajectory of the global economy. And also overnight, we had some weak data coming through from China. We'll get to that in just a moment. That has been another catalyst for the energy complex today as well. And then euro coming off a stellar week last week. The euro currency jumping more than 4% throughout the course of the last 5 days of the week. And of course, that on back of some of the optimism that's being priced into some of these European markets on this big fiscal boost, this defense spending trajectory that also is giving the euro a bit of a bounce as well. Flipping over, I also just want to point out the contrast that we're seeing with some of the optimism vis-a-vis Europe and some of the negativity now that is surrounding the U.S. and sentiment towards the U.S. Take a look at this indicator. This is one of the New York Fed model indicators that predicts a recession. And here it's at the highest level in over 40 years in terms of the probability of a U.S. recession hitting in the third quarter of this year. So that just gives you a little bit of context surrounding some of the negativity towards U.S. assets. But let's continue the conversation and check in on how markets in Asia are faring as well. Avril is in our Singapore studio, and we did have a bit of a surprise to the downside for some of the China data coming through this morning.
Yeah, the data came out over the weekend, and we're seeing how CPI slipping below zero for the first time in more than a year. You're seeing deflation, not just in services, but consumer goods as well. So a bit of a painful picture as far as the economic recovery is concerned, and something that cannot be explained away by seasonality. So Chinese stocks are down today. We're watching the 24,000 level on the close in China, on Hong Kong markets as well, a key level to keep an eye on. And today it looks like these deflation worries are helping, or not helping, I should say, to offset the AI optimism. Tech is also languishing. Amid all this, it's interesting to see Japanese stocks managing gains, and this is coming in spite of the yen strength that we're seeing. Of course, some of this has got to do with the safe haven credentials that are boosting the Japanese currency, but also these bets coalescing around the BOJ, maybe hiking sometime in the second quarter.
Yeah, that close focus still on some of those Chinese tech stocks. Avril Hong, thank you so much. Now, former Bank of Canada and Bank of England Governor Mark Carney has won the race to become Canada's next Prime Minister. He says retaliatory levies against the U.S. will stay until Trump drops tariffs.
The Canadian government has rightly retaliated and is rightly retaliating with our own tariffs that will have maximum impact in the United States and minimum impact here in Canada. My government will keep our tariffs on until the Americans show us respect.
Well, joining us now is Audrey Turnbull, Dalhousie University Professor of Political Science and the Faculty of Management. Good to have you with us. Let me just ask you about the extent of Mark Carney's victory. A bit of a landslide. He secured 86% of the vote, with the other 14% shared by the other three candidates. So a very strong endorsement of Mr. Carney. How does that bode for the upcoming general elections?
I think it gives Carney a sense of legitimacy. It makes it easier for him, I think, to take on Pierre Poilievre and the Conservatives. It makes it easier for him to talk about standing up to Trump, because I think if the Liberals had been divided in choosing their new leader, it would have made it harder for him, because he would have had to figure out how to rebuild the party, bring the various factions of the party back together. But he doesn't have to worry about that. The party is united behind him. And so even though he doesn't have a seat in the House of Commons, he has a very strong mandate from his party.
Yeah, well, Canada has to have an election by October. And one thing that everyone has been pointing out is the fact that the polls have started to move tighter and tighter between the Conservatives and the Liberals. What do you think Mark Carney decides to do from here? Will he call an earlier than anticipated election, or hold on until autumn?
I think he will go to election very soon, because he doesn't have a seat in the House of Commons. And so if the House were to reconvene, it would be without him. And so then all of the business that's happening, the back and forth in the House of Commons, the sound bites, the debates, that would all be without him. And with him, again, without this mandate from the people, I think especially given the difficulties that Canada is in with the U.S. right now, the fact that we are having these trade wars, the fact that the U.S. well, I shouldn't say the U.S., but Trump is threatening this Canada as a 51st state kind of thing. Carney really needs a mandate from the people to be able to be strong in his own position, to really be able to stand up to Trump. And so I would think we will see an election called very soon.
Yeah, okay, interesting. How much do you think his background, in terms of having served as a Bank of England governor and a very well-known, prominent figure in the world of finance, has actually served him well in this election, given, again, all of the chatter around tariffs and the economic impact of tariffs?
I think that has had the effect of elevating Carney's candidacy quite a bit, because he's not necessarily a well-known person in Canada, even though he's held these very high-profile portfolios. He's done this important work. He's still not necessarily a household name. But I think the fact that he has this very unusual skill set and this experience in managing economic crises, in this particular moment for Canada, this is a really important thing that he brings to the table. I think that he is being judged differently because of that. He's being put in a much shinier light because of that. He's not a career politician. He comes to this with a different kind of experience. And I think that has been very much a key factor in him solidifying the kind of win that he did last night.
Yeah, I mean, I think for all heads of state these days, you need a basic understanding of economics to be able to deal with all of these different headlines. Audrey, a real pleasure to have you on the show today. Thank you so much. Audrey Turnbull, Dalhousie University Professor of Political Science, Faculty of Management. Thank you. Now, President Trump says he has largely lifted a freeze on U.S. intelligence sharing with Ukraine, as Russia says it is ready to discuss a temporary truce.
I think what's going to happen is Ukraine wants to make a deal because I don't think they have a choice. I also think that Russia wants to make a deal because in a certain different way that only I know, they have no choice either.
U.S. and Ukraine negotiators are set to meet in Saudi Arabia on Tuesday to discuss a truce with Russia. And Ukrainian President Volodymyr Zelenskiy is also traveling to the kingdom to meet with Crown Prince Mohammed bin Salman today. So joining me now is Bloomberg's UAE Bureau Chief Dana Khrish. So Saudi, once again, hosting what could be quite critical talks. Some people are describing this as a potential peace week. So we could actually see a major breakthrough. And of course, U.S. and Russian delegations were also in Saudi Arabia a couple of weeks ago. Dana, why is Saudi evolving into such an important player vis-a-vis these discussions?
So this is Saudi's plan, right, to rise as a soft power. And they're using a different kind of diplomacy, different than when MBS came to power, Crown Prince Mohammed bin Salman. We saw what happened then when he came into power. They went into Yemen. They were a little bit of an aggressive in Lebanon as well. So now they have, over the years, changed that. They're on a course of very soft power, using their diplomacy, their leverage. And this is also, when Trump came to power, we knew that looking at the Gulf, they are very comfortable with him. They have really close ties with him. We saw how when in his last term, his first foreign visit abroad was actually to Saudi Arabia. We saw that phone call between MBS and Trump about this huge pipeline of billions of dollars of investment into the U.S. And also, we knew that this relationship would come into display, and this is also how it is now. This is a show of really close U.S. and Saudi relationship, but also we saw last week, maybe not directly linked to that, but OPEC policy, right? Unwinding some of these cuts that they have for several quarters actually held back. But there is a tricky part here, and that's the Israeli-Palestinian conflict, right? Saudi is not ready to actually make any concessions of that. And we know that Trump's foreign policy, that main priority, is normalizing relations between Saudi Arabia and Israel, and of course to integrate Israel better in the region, to have better talks with its neighbors and Gulf allies. So this might be the tricky part later on, but now we're seeing this really close relationship between everyone on full display.
And just very quickly, Zelensky was actually in the region a couple of weeks ago in the UAE and Turkey. He didn't go to Saudi Arabia then, but of course he's back now. His meeting will be directly with the Crown Prince MBS. What can we expect from that particular meeting?
Now, this isn't the first time that Zelensky goes to Saudi Arabia and meets with the Crown Prince, right? So he is comfortable in that setting as well. And maybe that's why Saudi Arabia seemed to be the best host for these talks, Russia, U.S., or now U.S. and Ukrainian side. I think that Zelensky really wants to be on the table for any discussion about ceasefire, even if it's a temporary truce. That's what we saw from our original reporting earlier, that Russia is kind of ready to have some kind of temporary truce, a framework agreement that would lead to that. And I think that given that close tie between Saudi and the U.S., I think Zelensky would expect more of the same rhetoric as Trump. You need to come to an agreement. You are weaker now with less U.S. intelligence sharing, yes, U.S. weapons supply. So we need to come to an agreement, and this is kind of has to be the top priority.
And of course, Saudi Arabia neutral in this regard, as opposed to, say, if the talks were taking place in Europe. Bloomberg's UAE Bureau Chief Dana Khrish, thank you so much. Well, still ahead, President Trump says the U.S. economy faces a period of transition, deflecting concerns about the risks of a U.S. slowdown. Standard Chartered Wealth Management shares their market strategy next. This is Bloomberg. Equities, Treasury yields, and the dollar fell on Monday as concerns about the health of the U.S. economy weighed on investors' appetite for risk. Joining us is Audrey Goh, Standard Chartered Wealth Management Group's head of asset allocation. Good morning to you, Audrey. I actually just want to start with the Friday's payroll print and the numbers that came through. So even though we got a slight miss versus expectations, both on revisions and on an unemployment rate, it perhaps wasn't the worst case scenario given how dim people's expectations are for the trajectory of the U.S. economy. What is your take?
Well, I think the Friday's non-farm payroll report was, even though it came in slightly below what markets expecting, it still reflects a relatively robust labour market with 150 over 1,000 jobs added over the month. And if you look at it in the context of history, for example, typically we need to see non-farm payroll, edging towards a negative print for that matter, before we see recessionary concern or recessionary risk hiking up significantly. In fact, over the last 40 years, bearing the 2020 COVID episode, we basically have the non-farm payroll getting into negative, and then after that, we get a sort of US slipping into a recession. So having said that, if you look at the print today, I would think that it still reflects a relatively robust set of labor market and hence consumers within the US.
Yeah. So do you think those 70 basis points of rate cuts that are priced into the US curve are actually going to get realized?
So I think the rate cut expectation has been moving pretty volatilely this year so far. On our end, we are expecting just 2 rate cuts this year because the overall US economy is still on a relatively solid footing. And recessionary risk is actually quite benign. So if you look at the latest Q4 earnings season in the US, FactSet did a very interesting analysis where they look at the number of times corporates or senior management mentioned the word tariffs and recession. So clearly the word tariffs, saw a spike of about 40% versus first Q 2018 when tariff issue first surfaced. And if you compare that with recession, that was actually at a sort of a lows versus the levels that we have seen in 2018 as well. So net-net, I think it's quite clear where corporates are more worried about. It is really more in terms of the uncertainty on trade, on tariffs, rather than so much on recessions. So I think that put us in a pretty good spot when it comes to US equities.
Let me ask you about the dollar, though, because the dollar took a bit of a beating last week, down 2%. It's actually the worst week since 2022. And many people are saying that the market focus for currencies has moved away from MAGA to MEGA, make Europe great again now. What do you see happening with the greenback from here?
So yes, I think in the near term we've seen quite a fair bit of weakness when it comes to the US dollar. But largely, they are still trading within their range, of around 100 to 110 on the DXY index. We have not really seen the DXY index breaking sustainably lower, below 100. I think for that to happen, we probably need to see some form of a confirmation that Europe indeed is going to go ahead with fiscal easing. And to me, right now, there's a lot of rhetoric, sort of positive rhetoric around that. Whether the action will come to fruition is still a question mark, because we know that if you look at historically, Europe has always sort of underwhelmed when it comes to the delivery of stimulus-related support. But having said that, it's moving in the right direction. So I think for now, in the near term, I wouldn't be surprised to see some form of a bounce in the US dollar index, but we'll be biased to a weaker dollar actually over the rest of the year.
Audrey, we're tracking the data that's coming through from China today as well, the deflationary numbers, CPI, a bit of a surprise there. Is there anything that you learned from the NPC in the last week that makes you feel more confident about where the China economy is headed?
So on the NPC meeting, so far what we have seen is the authorities basically reaffirming their growth target of about 5% for this year. And at the same time, they've also increased their spending or budget deficit to a decade high of about 4% of GDP. So those are right steps in the right direction. For now, I think we'll continue to see this rather bumpy recovery in China because trade remains an overhang. And at the same time, if you look at the property market, property prices is still sort of in the doldrums, right? We've not really seen a very sustained recovery when it comes to property prices. So our strategy on China is really more towards a barbell approach where we'll focus on some of the more growth-oriented Hang Seng technology, and then pair them up with high dividend stocks to really get paid while you're waiting out for more sustained recovery.
Interesting. Audrey, we're going to leave it there. Thank you so much. Audrey Goh, Standard Chartered Wealth Management Group's head of asset allocation. Thank you. Now, coming up, Syria sees its deadliest clashes since the toppling of President Bashar al-Assad. The details next. This is Bloomberg. Syria's interim president, Ahmed al-Sharaa, has formed a committee to investigate the violence in some cities. Authorities say clashes erupted on Thursday when armed men affiliated with the ousted regime attacked multiple security sites along the country's Mediterranean coast. The Syrian Observatory for Human Rights says the overall death toll in 3 days has reached 1,311. On our aunt, Bloomberg's managing editor for Middle East and North Africa, joins me now. Really bloody scenes in Syria over the last couple of days. More than 1,300 people killed. Just walk us through what happened, Honor.
Definitely the worst period of violence since the change of guard in Syria in December. As you said, there seems to be a group of armed men, apparently loyalists of Bashar al-Assad, who attacked various points. Obviously, that resulted in some casualties, but the real bloodbath, so to speak, began right after that. It seems that various groups from both sides ended up killing each other in revenge killings and retaliations, summary executions based on reports from various both media groups and human rights groups. It seems that over 1,200 people have been killed, and a majority were civilians, dominantly Alawites in Syria, who, as you said, are seen as affiliates of the former regime, although that's not necessarily the case. But that's what resulted in the retaliation killings.
Yeah, it's almost as though we're seeing the international community's worst fears sort of begin to play out. Number one, the resumption of violence in Syria. Number two, the oppression of minority groups. What bearings is this all going to have on Ahmed Shara's transitional government?
Well, both he and his foreign minister basically told the world that this is an isolated event, it's got nothing to do with government policy, and we're going to take care of this. We're going to find who's accountable and hold them accountable. But on the other hand, there will be implications for that, for them. First and foremost, we have seen from the US that there have been calls on the Syrian government to basically hold people accountable for what happened and prevent that from happening again against minorities. But more importantly, there are things that the Syrian government needs to get done, such as lifting of the sanctions against the government in Damascus. For sure, this is going to be on hold for a while after what happened over the weekend. And we've also seen that neighbors of Syria, as well as Syria itself, were eager to basically make sure that this doesn't turn into an event that results in other countries increasing their influence inside Syria. We have seen foreign ministers from Jordan, Turkey and others make this point after a meeting in Amman just yesterday.
Yeah. Well, a story that we're going to continue monitoring very closely. On our end, Bloomberg's managing editor for Middle East and North Africa. Thank you. Well, coming up, U.S. and Ukraine officials meet in Saudi, while President Zelenskiy is set for a sit-down with Saudi's Crown Prince Mohammed bin Salman. All the details coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mark Carney wins the race to become Canada's next Prime Minister ahead of a general election set to be dominated by how to deal with President Donald Trump. China's consumer inflation drops below zero. Sluggish consumption also sends core CPI negative for only the second time in more than 15 years. And Syria's government forms a committee to investigate violent attacks, which an NGO says have killed more than 1,300 people in the last 3 days. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Let's just get a refresh on how some of the markets are trading after a very negative week for these U.S. indices last week. The S&P ending the week down more than 3%. By the way, European indices had the exact opposite, ending up very solidly in the green. The Euro Stoxx 50 up more than 3.5% last week. So a bit of divergence going on between U.S. equities and European equities. A lot of focus on that NFP print on Friday. Mildly disappointing, and also that uptick in the unemployment rate is what people have been paying attention to. And on the back of that, the risk-off sentiment is continuing this morning. The futures, S&P futures dipping down 0.4%. We also have those CPI numbers to look forward to on Wednesday as well. So pay attention to that. 2-year yields, as you see, below 4% now. So we're just tracking 2 basis points lower. 3.97 is where we're at. About 70 basis points worth of rate cuts priced in just for this year. So the market is quick to price in more more of an easing cycle out of the Fed just in the last couple of weeks. And then Brent back above $70, but we did break through it to the downside this morning, down 0.4% for the energy complex. It's down 9% in the last month, again, on concerns about the growth dynamics around the world, in addition to tariff concerns and some of the weakness that's coming through from China, with the China data this morning disappointing to the downside as well. Euro coming off a very strong week, however, in line with what we saw with those European equities. The euro jumped more than 4% last week. Its best week in over, I want to say, something like 10 years. It was a very, very strong week for the euro currency. And this, of course, as the market there continues to price in optimism surrounding growth and a potential fiscal boost. So on that topic, let's just switch over. And let me just show you the price action that we've seen in some of these European bond yields. Just look at what happened to bond yields throughout the course of the week last week. A jump of more than 45 basis points. And even though the catalyst was Germany, the 10-year yield change for Germany going back as much as a month as 46 basis points, it's also dragged along other countries as well. So France and Italy, those bond yields also higher, anything between 46 and 50 basis points. So the market isn't just focusing in on dynamics within Germany, but also for the broader Eurozone region as a whole, and what the renewed focus on defense might mean for joint borrowing and potential more issuance to come. So that's the picture for European yields. But let's also go back to how markets in Asia are faring. Avril Hung is in our Singapore studio. Quite a negative handover today, Avril.
Yeah, we're seeing Asia stocks lower, and so too what we're seeing in the Chinese mainland and in Hong Kong. But let's take a look at the renminbi as well. Dollar China has been moving higher, and amid all this, it's of course the backdrop of these deflationary pressures, CPI below zero for the first time in more than a year in China. These factors, well, seasonal factors, can't quite fully explain what's happening. So deflationary pressures persist in China. Domestic demand looks weak. And of course, today, the weakness you're seeing in renminbi is also because of the PBOC's fixing. It came in weaker than the prior session. We have the likes of Goldman also saying that they expect dollar China, specifically onshore renminbi, to remain range-bound in the next 3 months, with the swing factor being broad dollar as well as tariff news. Remember, we have a review that is results will be due at the start of next month, because amid all this, the situation is rapidly shifting, very fluid, and that might inform some of China's unwillingness to use yuan weakness as a tool to deal with tariffs.
Yeah. Avril, thank you so much for that overview. Avril Hong in Singapore. Well, China's consumer inflation has fallen below zero for the first time in 13 months, a sign the economy still faces deflationary pressures. Bloomberg's China correspondent Min Min Lo joins us from Beijing. Just walk us through what we got from the Chinese data this morning. It was a bit of a surprise that the number dipped back into deflationary territory for the first time in over a year, Min Min.
Yes, we got pretty disappointing data this week overall during the NPC week, because last week we had the pretty disappointing imports, exports data as well, imports collapsing by about 8%, and now you have that CPI as well down 0.7% versus a 0.5% gain the previous month. Last month we got a bump because of Lunar New Year, but this month, because of the high base effect, last year's Lunar New Year fell entirely in February, so there's the seasonal distortion there. You can see the food prices was down 3.3% in February, dragging down the entire index. But you take away the core, the volatile food and energy prices, you look at the core inflation, that's in contraction as well, down 0.1%, which is only the first time since 2021, the second time in about 15 years. That really underscores how serious this deflationary pressure is. And you look at the PPI as well, that's down for the 29th straight month, again underscoring how that supply-demand imbalance still persists in the Chinese economy, and why it's important for the government to double down on boosting consumption. And of course, investors still anxious to hear more details on exactly how the government plans to do that. Last week, the economic planner at the press briefing last week said that they will unveil a government action plan very soon.
And while we're talking about the state of the Chinese economy, it's also worth reminding everybody that some of those tariffs on U.S. products have actually gone into effect today, those levies of up to 10 to 15%. China have also talked about tariffs, retaliatory tariffs, not just on the U.S., but also on Canada as well, very topical with Mark Carney as appointment overnight. What do we know about China's thinking vis-a-vis tariffs, and not just versus the U.S., but versus any counterparty around the world?
Yeah, I think it's quite interesting to compare China's response so far to the US versus Canada, because just over the weekend, the Chinese Commerce Ministry announced those tariffs on Canadian goods, 100% on rapeseed oil, 25% on pork and certain seafood products. That is matching the tariff rate that Canada has imposed on China, 100% on those EVs, 25% on aluminium and steel back in October. So it's a tariff rate that matches the scale of the Canadian tariffs versus the U.S. response. China's response to U.S. rather has been less than proportional. So the message here seems to be that China is signaling to Canada that they are willing to hit hard, aggressively in a more proportional manner, a warning here to Canada not to impose further tariffs at a time when U.S. has been pressuring Canada to match those tariffs on Chinese goods to form a sort of American fortress in North America. It's also come at a time when Canada is proposing early talks to review that North American Free Trade Agreement as well.
All valid points. Bloomberg's China correspondent, Min Lo, thank you so much. The U.S. and Ukraine negotiators are set to meet in Saudi Arabia to discuss peace with Russia. Meanwhile, Ukrainian President Volodymyr Zelenskiy is also traveling to Saudi, but to meet Crown Prince Mohammed bin Salman. Joining me now is Karen E. Young, Senior Research Scholar, Center on Global Energy Policy at Columbia University. First of all, thank you for staying up so late for us. I know the hours changed in the U.S. We really appreciate it. Looking ahead to this week, many commentators are saying that actually we could see a real chance of a breakthrough. And it is interesting that out of all of the countries in the world, it's Saudi Arabia that is hosting these talks with the delegations, with Zelensky himself. Why do you think Saudi Arabia has taken this role upon itself?
Well, thank you, Jumana. Good to be with you. I mean, I think, first of all, this is Saudi hospitality. It's a host role. It's not a mediator role. And also, this was a planned visit that Zelensky was planning to come to meet the Crown Prince, and that was postponed because Russia and the United States had meetings in Saudi Arabia to which he was not invited. So this is a visit that was meant to have happened in February. The delegation that's coming from the U.S. State Department, including Secretary Rubio and Mike Waltz and Witkoff, will be meeting with the Ukrainian members of the presidential office, foreign minister, and I think the Minister of Defense. And that's really the heart of the negotiation between the United States and Ukraine on the natural resource agreement and the move that President Trump is pushing, very much putting a lot of pressure on Ukraine to go for a ceasefire against Russia.
Yeah, and of course, one of the aspects that the U.S. administration has been pushing for is to get Ukraine to sign on to this minerals deal. And I just wonder, maybe I'm over-extrapolating here, but whether there is some sort of business connection to Saudi Arabia as well, given Saudi Arabia's own ambitions in the mining space.
Yeah, I've been thinking about this too, and I do think it is a natural synergy. And the way that President Trump uses this transactional diplomacy, he likes to have interlocutors who are in a somewhat subordinate position so he can make an ask. And Saudi Arabia is uniquely positioned with capabilities in growing its own domestic mining capacity, but also its ability to invest and operate mining, kind of ventures on a global scale. And so this might be part of the ask of the co-investment fund between the United States and Ukraine, that Saudi Arabia could play a role as an operator, as a co-investor. That's speculative at this point, but I do think there is some synergy.
Yeah, could be an interesting angle. Let me just bring it back to Saudi Arabia and this increasingly, I want to say, maybe assertive diplomatic role that they've been playing, not just globally, but also within the region as well. You definitely feel it in the last 6 months since the toppling of the Assad regime, the waning of the influence of some of these Iranian proxies. Saudi Arabia seems to be a lot more present. Is this just a new face of Saudi Arabia that we can expect to see in the coming years after a period of relative de-escalation?
I think this has been the plan for some time, and I would actually trace it back to when Saudi Arabia hosted the G20 meetings about 5 years ago. That was sort of the coming out, and really Saudi Arabia saying we are a model of economic development for emerging market economies. We know what we're doing. We want a place on the world stage. And in 5 years, absolutely, they are achieving that. Situations have changed, right? There have been just tremendous developments in the region, including the war in Gaza, the collapse of Assad's regime, as you say, in Syria. But they are more willing to be front and center, along with maintaining this focus on the domestic transformation. I don't think that has changed. That is still the #1 priority, but the kind of regional leadership role and taking that to even a global stage has certainly been a goal for some years, and now it's coming to fruition.
Yeah, well, Karen, since you mentioned Syria, I don't want to let you go without asking about the weekend's developments in Syria. How concerned are you about the flaring up of violence and also this very targeted killing of minority groups?
It's terrible, and it certainly does not bode well for the government in Syria and the government's real effort to try to normalize relations with Western partners, and certainly to get some sanctions relief and some normality into like the basic operations and functions of government and government finance. And without that, they will never be able to, create peace and security throughout the whole territory and be able to function and be able to operate certainly and be able to borrow money. So this is really bad timing from a government kind of management perspective, and certainly just a terrible tragedy for the Alawite community and minority communities at large.
Yeah, most definitely, and most definitely also a setback for the Sharia government. Karen E. Young, Senior Research Scholar from the Center on Global Energy Policy at Columbia University, thank you so much for joining us today. Now, coming up, Kenyan President William Ruto is joining hands with his political rival in a bid to calm down anti-government protests. Details up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Kenya's President William Ruto has signed a power-sharing agreement with opposition leader Raila Odinga. Now, this comes months after deadly anti-government protests and could see the establishing a post of Prime Minister. Now, Bloomberg's Indira Ganga joins us for more really fascinating development. What do we know about this power-sharing arrangement between the two leaders?
Hi, Jumana. So President William Ruto says this accord is meant to bring Kenyans together and also try and address systemic issues that have been plaguing the country. They intend to lower the cost of living, create jobs for the youth, and also tackle corruption. But if you listen keenly, you'll hear that bread and butter issues are still ringing very loudly across the country. Even though inflation is low, 3.3%, the cost of basic goods, particularly food, is still a pain point for very many Kenyans. And you also have Kenyans who are very dissatisfied with the state of public service. Take healthcare, for example. It's in a state of disarray. There was an overhaul of the National Healthcare Insurance Scheme, and now this has affected how quality of services rendered to Kenyans. The country is also in high risk of debt distress. They're currently in talks with IMF for a new program when the $3.6 billion program expires sometime in April. So this accord is aimed at not only helping President William Ruto fortify political support in the country, but also calm down political temperatures. On the 25th of June, there were deadly protests that left 60 people dead, forcing the government to call back these taxes and also lean in on Raila Odinga, tapping 5 of his key allies into government in key sectors like energy and national treasury.
Yeah. I mean, Ondira, you just brought up that June date. That was more than 6 months ago. These demonstrations, these protests have really been going on for a very long time. That is the backdrop here. How likely is it that this new power-sharing arrangement can actually succeed at bringing down the temperature and quelling what the protesters are asking for?
Jumana, so one thing about Kenya is more often than not, they retreat to their tribal cocoons when the election and political season is coming up. And so last year, President William Ruto lost his deputy president, Rigathi Gachagua, when he was impeached. And that meant that he lost the base that came with the deputy president. So this new accord enables him to tap into Raila Odinga's staff of very loyal supporters. Also, there's something to be said about the flow of parliament. The more majority he has in parliament, the easier it will be for him to introduce new tax measures, pass them, and raise revenue in the country, irrespective of how unpopular these policies are going to be amongst the citizenry. But also important to remember is that on the 25th of June, something very monumental happened. And while politics is still largely games, gimmicks, and political figures, it's gradually also becoming about policy interpretation and implementation. So while the president and Raila Odinga begin their national tour to popularize this accord, Kenyans online and also on ground will be waiting to disprove any fallacies or policies that come out that are not aligned with the national agenda.
Very clear. Bloomberg's Ondiro Oganga, thank you so much for the reporting. Now let's take a look at some of the other stories we're following today. France has returned 2 military facilities in Senegal, starting a process that's expected to see the withdrawal of French troops from the West African nation. In December, the Senegalese president said all foreign military presence will end from 2025. France currently has about 350 troops in the country. The second biggest party in South Africa's ruling coalition, the Democratic Alliance, says it will only support the national budget if it puts more emphasis on economic growth. A previous iteration was unprecedentedly delayed after the DA and others opposed a 2 percentage point hike in VAT. The DA says the previous budget had, quote, clearly given up on growth. And Mali is to resume granting permits for mineral exploration this week after the process was suspended more than 2 years ago. The decision marks a turning point in reforms made by Mali's transition government. The West African nation's gold production fell from 67 tons in 2023 to 51 tons last year. And coming up, natural gas has become America's most important export, and President Trump is using it to his advantage. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, in the past 7 years, the U.S. has gone from barely producing any natural gas to becoming one of its biggest suppliers. The U.S., spearheaded by President Trump, is now using the commodity as geopolitical leverage. For more insight, Bloomberg senior energy reporter Stephen Pshinsky joins us from Singapore. Let me just start off with the statement that I was just talking about, which is the fact that in 2017, the U.S. was not known at all for its LNG production capabilities or even its LNG exports. You fast forward to today, and the U.S. is a bigger exporter of LNG than even Qatar. How did we get to this point?
I mean, it's all about shale. It's the shale revolution. I was just pulling up some data. In 2003, which is about 23 years ago, the United States was a net importer of liquefied natural gas. And actually, analysts at the time were expecting that the U.S. would become the world's biggest importer by 2020. The shale revolution, which was a way to sort of tap natural gas and oil within shale reserves underneath the ground across Texas, Pennsylvania, absolutely changed that and threw it all on its head. Overnight, the U.S. became a major producer of gas, so much gas, in fact, that they didn't need all of it. And so they took these import terminals they were planning and they converted them to export terminals and then built more export terminals and started shipping it. The first liquefied natural gas export from shale began in 2016, and it's been a constant rise since then. And the U.S. overtook Qatar and Australia as the world's biggest LNG exporter recently, and it's not slowing down. By the end of the decade, the U.S. is going to double, essentially, the amount that it's exporting, cementing itself as the world's biggest supplier. Let me give you one more data point. By 2030, 1 in 3 shipments of LNG, a very important fuel for heating, power plants, and chemicals, will come from the United States.
Yeah, and so how much has the Ukraine war, the Russian war in Ukraine, spurred on extra demand from external counterparts to the U.S. for this LNG?
Yeah, I mean, also the war in Ukraine is a game changer. It's essentially halted a lot of Russian gas supply, pipeline gas supply, to Europe. To fill that gap, a lot of European buyers had to depend more on liquefied natural gas. And because the U.S. is just proximity-wise close to Europe, a lot of that LNG flow shifted away from Asia, home to the world's biggest importers, towards Europe. Now, that shift happened because of spot trade. The price of natural gas in Europe surged, and it made it more economically viable. There was a better arbitrage to send those LNG shipments within the Atlantic into Europe. Now, the amount of LNG that's coming online today, yes, it is being spurred due in part to more demand from Europe, but a lot of the demand, a lot of the supply that's coming online has been purchased by Asian buyers. Asia will still be the home to the biggest demand growth centers. I'm talking places like Southeast Asia, India, as well as China.
Yeah. Fascinating. Well, you can read all about our big take today on the terminal. It's all about what the U.S. has done on LNG exports. Stephen, thank you so much. Coming up in the next hour, Paul Diggle, chief economist at Aberdeen, joins us for his take on the outlook for the U.S. economy. I'm Jumana Versace in Dubai. Stay with us as Jennifer Zabazaja joins me from Johannesburg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Mark Carney wins the race to become Canada's next Prime Minister ahead of a general election set to be dominated by how to deal with President Trump. China's consumer inflation drops below zero. Sluggish consumption also sends core CPI negative for only the second time in more than 15 years. Syria's government forms a committee to investigate violent attacks, which an NGO says have killed more than 1,300 people in the last 3 days. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. Jumana, nice to have you back. It was quite a busy week, but a lot to pay attention to in the days ahead, as your chart is clearly showing.
Yeah, always is. It always seems to be super busy, especially when I'm taking any days off. The news comes thick and fast, Jen. But one of the things that stood out to me last week was the big divergence we're seeing between what's happening with U.S. equities, which ended the week in negative territory, down more than 3%, and European equities, which saw yet another really strong week last week, up more than 3.5%. So there's this new theme that's emerging for markets. But as for today, you can see that we are pretty much in risk-off sentiment as well. So a continuation of Friday's theme for Wall Street. S&P futures down 0.5%. Focus on those NFP numbers, the payrolls figures that came through on Friday, mildly disappointing versus expectations. But of course, all the uncertainty around tariffs and what that means for businesses is also weighing on sentiment as well. And that is also being expressed in the front end of the yield curve. Two-year yield trading below 4% now, another 2 basis points lower on this session. Brent also very much in focus. You can see now we're trading at around $70. Earlier on, we were trading below. We got to $69 handle, down 0.5%. But clearly, a lot of downward pressure still being exerted on the energy complex on back of weak data, concerns about the global growth outlook, and also some of the China data coming in this morning, disappointing to the downside as well. And then Euro taking a bit of a breather this week after jumping more than 4% last week. Our producer just flagged to me that it is Actually, it was the best week for the euro in 16 years last week. So a really massive jump in terms of where the euro currency is trading, and also a very weak week for the USD as well. So it works both ways. Flipping over, though, let me just show one chart that I think is quite interesting, too. And this is an indicator that the New York Fed puts together to reflect market expectations and data approximation of a recession probability. And this is clearly showing us that this model has hit its third highest peak in 40 years, and that it is pricing in a decent chance for a U.S. hitting a recession in the third quarter of this year. So there we are. We're back to talking about a U.S. recession again after the soft landing narrative that was prevailing for most of last year. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, talk us through the data that came through.
Yeah, we are talking about China's deflationary pressures persisting, I guess. And, you saw that data over the weekend that shows CPI below zero for the first time in more than a year. So it just reflects the domestic demand still looking really weak in the face of external pressures. And these deflationary pressures, the data can't just be explained by seasonal factors. Chinese stocks are down today, but Asia, I think, is getting hit by a bit of a double whammy. Also, those U.S. growth concerns based on the jobs report, right? And it showed that these cracks in the labor market are emerging even before you account for some of the impact from DOGE measures. So two of the biggest trading partners for a lot of the economies in the Asia Pacific, these growth concerns weighing on sentiment for the rest of the region. The Nikkei is a bit of an outlier, interestingly enough, but it's not just stocks that are getting hit today. We're also seeing it playing out in FX, a gauge of currencies in the region, which excludes the Japanese yen, falling by the most in more than a week. And of course, we're going to be keeping a close eye on the close in Hong Kong. It's past that key 24,000 level now on the Hang Seng. If it closes at these levels, could really prove to be a pain point for Chinese stocks, particularly on the momentum trade. And today, as you can see there, it looks like AI optimism is not helping to offset some of these deflationary worries.
Yeah, so some crucial levels being tested right now in these Asian markets. Avril Hong in Singapore, thank you so much. Now, former Bank of Canada and Bank of England Governor Mark Carney has won the race to become Canada's next Prime Minister. He says retaliatory levies against the U.S. will stay until Trump drops tariffs.
The Canadian government has rightly retaliated and is rightly retaliating with our own tariffs that will have maximum impact in the United States and minimum impact here in Canada. My government will keep our tariffs on until the Americans show us respect.
Joining us now to discuss is Bloomberg's Bill Ferries. I thought it was going to be neck and neck, if I'm honest, with Freeman, but that wasn't the case. It looks as though Carney really did secure a landslide victory, getting 86% of the votes. He has quite a strong mandate within the Liberal Party now.
He does have a strong mandate, and perhaps what may have helped him in this case was all of his kind of economic battlefield experience in the past, of course, leading the Bank of England at the time of Brexit and leading the Bank of Canada back during the global financial crisis. And it's arguable that Canada is facing another crisis right now as trade relations and political relations with the United States deteriorate very, very quickly here. They have had a reprieve on some of these tariffs until April. But as you know, steel and aluminum tariffs are still set to come in on Wednesday. And we've heard from the administration in terms of saying there will not be additional delays when it comes to implementing some of the 25% tariffs that have been kicked into early April.
Yeah, I mean, he's probably one of the few heads of states out there who can actually draw an economic model about the impacts of all of these tariffs that are being imposed. But let's talk about what happens next, because Canada are due for a general election by October of this year. And it seems like the calculus and the decision he has to make is whether to call it early or to wait a little bit and see how the polls evolve over the next few months.
Yeah, as you said, October is that real deadline. There are some people thinking that he may make the call for elections just soon after taking office to kind of rip the Band-Aid off, try to get that mandate for the Liberal Party and for his leadership, and to go forward with these talks. He could also try to delay a few months and see where the relationship with the U.S. works out. There's a very good possibility that this is going to be a drawn-out fight. So a matter of a few weeks now may not make a difference in the long run. But obviously, April is just a few weeks away. He may want to hold off and see how things develop in the next couple weeks before then.
Yeah. Bloomberg's Bill Ferry said thank you for hitting us up to speed on all things in Canada today. Now, equities, treasury yields, and the dollar fell on Monday as concerns about the health of the U.S. economy weighed on investors' appetite for risk. Paul Diggle, chief economist at Aberdeen, joins us now, and it is Aberdeen with the new rebranding, but it's still pronounced as Aberdeen. That was one of my favorite stories last week. Paul, that aside, let us talk about the narrative surrounding growth. It really does feel like in the past couple of weeks, Europe aside, people have turned a lot more negative about the trajectory, not just for U.S. growth, but also for China growth as well. The data disappointing to the downside. Is this, do you think, the narrative that's going to be driving markets in the short term?
In the short term, yeah, I think we're seeing a reversal of the US exceptionalism trade and the Trump trades. And what's happened is this big pothole in US Q1 GDP growth has emerged. The nowcasts are showing a large contraction. The survey data's got a lot weaker. Parts of the hard data's got weaker. Meanwhile, European growth is going to receive this injection from fiscal stimulus. Probably that plays out more in the medium term. There are still headwinds to short-term European growth, but the narrative is changing. Trump appears to be galvanizing the European governments into action. Germany is going to be removing its debt brake, and there's more stimulus coming there. Meanwhile, Chinese headwinds to growth persist. The 2 sessions saw stimulus added, but at the same time, real estate consumption headwinds are still in place. So we're seeing a reversal of some of that global narrative from the back end of last year.
I don't know if you saw, but earlier on in the show, I put up this indicator that the New York Fed put out that tracks recession probabilities, and it actually spiked really high in the last couple of days. And I wonder whether we are going to go back to talking about the potential for the U.S. economy to enter into a recession in the latter half of this year. Where do you stand on that debate?
So I would just about come down on the side that says the U.S. probably won't experience the end of its business cycle, a full-blown recession this year. I think it's going to be a contraction in Q1. The nowcasts are tracking something like -3% annualized. I mean, that is an enormous pothole, and it's been driven by the sentiment data falling off a cliff and parts of the hard data crumbling as well. Consumption appears weak. Meanwhile, the front running of tariffs means that net trade is going to be a big drag on Q1 growth as well. I think some of that actually gets then paid back in Q2. So, for example, the tariffs coming in would sort of ironically actually cause that net trade drag to swing the other way. And with the labour market still just about holding up, certainly cooling, but not yet at recession-consistent levels, I just about come down on the side of the US business cycle continuing for now after a Q1 pothole. But what's changed is that, as you say, that risk is back on the agenda. It's not just soft landing and US exceptionalism as far as the eye can see. The US cycle is genuinely up for grabs at this moment. Investors have to price in that risk.
Paul, this is Jennifer here in Johannesburg. Is there any part of the world, any market you think that can withstand a lot of these shocks at this point in time? We talk a lot about how Europe needs to come together in order to double down on some of their fiscal commitments. Can Europe potentially withstand some of these shocks? Or do you think everyone is potentially going to be navigating these highs and lows?
I think we're in a new world order, and every economy in the world is going to have to navigate the shocks that are coming from tariffs, a slowdown in global trade. What appears to be happening is that Europe is getting its act together, however. Europe often reforms through crises, the financial crisis, the European sovereign debt crisis, And actually, Trump and the tariffs are another such crisis that is proving a galvanizing moment for Europe. Add that up with the shifting transatlantic alliance, the need for Europe to become more self-sufficient in terms of defense spending, and we are seeing a shifting of the tides in terms of European fiscal policy. So there are still some hurdles to clear before Germany, say, does loosen its debt brake, but I think that's pretty likely at this point. And that's adding up to something like perhaps 2% of GDP fiscal expansion if you add together both the German infrastructure program and the loosening of defense spending. Not all of that is going to play out directly into GDP growth, but it is going to be a positive. So there's going to be this push and pull, the tariff headwind, pre-existing headwinds to European growth, the German growth, which has been so very weak over the past year or two. But at the same time, now there is this upside risk, this fiscal stimulus that's being added. And I think that starts to open up a bit of an improvement in the European growth trajectory.
And finally, Paul, your expectations then for monetary policy and the Fed?
Yeah, I think the Fed are cutting further. So the market's currently pricing in just over 3 rate cuts. I actually think that might be a little bit overdone because there are still these inflation headwinds. We don't completely normalize back to 2%. Meanwhile, tariffs are going to push up on US price growth. And I think the market may be over-extrapolating a little bit too much that Q1 pothole and really pricing in full-blown recession risk. The latest communication from the Fed, from Powell last week, is that they think they have time to monitor the incoming data, the growth and inflation data, and continue on their gradual easing. So I've got 1 further rate cut in my baseline. That could go a little bit higher. Market's pricing 3, maybe a little bit overdone at this point.
Paul, great to get your insights on this morning. That's Paul Diggle, the chief economist at Aberdeen, joining us there. Paul, thanks so much. Now, coming up, will there be a deal in the desert as Ukraine's president heads to Riyadh for talks? We'll preview the meeting next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. President Trump says he has largely lifted a freeze on U.S. intelligence sharing with Ukraine. This as Russia says it is ready to discuss a temporary truce.
I think what's going to happen is Ukraine wants to make a deal because I don't think they have a choice. I also think that Russia wants to make a deal because in a certain different way that only I know. Only I know. They have no choice either.
U.S. and Ukraine negotiators are set to meet in Saudi Arabia on Tuesday to discuss an agreement with Russia. Joining me now is Greg Sullivan, Bloomberg's Russia economy and government editor. The fact that this meeting is even happening is big progress from where we were, say, 10 days ago after that disastrous Oval Office meeting between President Zelenskiy and President Trump. So at least they're talking again. The delegations are planning a meeting this week. But what is the expectation out of what could happen in Saudi Arabia the next few days?
Well, I think what you said was crucial here, is that for Ukraine, they just need to keep talking. The meeting at the White House was very disastrous. This is a high-stakes meeting for Ukraine. They want to stay at the table. They need to stay at the table. This is their fight. But with the U.S. suddenly reversing and seeming to align with Russia, they're really worried that their security priorities will not be taken into consideration in any sort of ceasefire deal. Obviously, the U.S. shut off military aid, which was hard for Ukraine, but they can continue to fight. But the military intelligence was even more crucial. Yeah. So that's put Zelenskyy in a very tough spot.
Yeah, and of course, he did send that letter to President Trump, and he spoke about that in his address to Congress. So there have been some remediation steps, I would say, in the last couple of days. What do we know about what Russia are saying about the potential for this temporary truce?
So there's 2 factors here. One is that for Russia, time is on their side. They are continuing to fight and make progress. We saw some movement in the Kursk region. That strengthens their hand at the negotiating table. But we also know from Kremlin officials, from people in Moscow, that there may be a willingness to come to a ceasefire, but under certain conditions from Moscow. They do have an upper hand on the battlefield. They are going to demand certain considerations. And for Ukraine, it's key that their considerations also be taken into account by the U.S. And right now, we just see no sign from the U.S. that they are willing to do that. They do seem to be aligning with Russia.
And just lastly, I mean, I've asked some of our other colleagues the same question. Why Saudi Arabia?
Well, for one reason is that they can be a neutral player. Obviously, in Europe, the Russians do not see Europe as neutral players. Europe sees their own security issues at stake here in this conflict. But a lot of Gulf countries have actually helped mediate. We've seen the Russia-U.S. talks happen in Saudi Arabia. We've seen other states like UAE help mediate prisoner exchanges. But the other thing is that Saudi wants to be a regional power. And for them, this is a way to sort of exercise that and come to the global stage in that manner.
Yeah, well, deal in the desert. Maybe we get one this week. Greg Sullivan, Bloomberg's Russia economy and government editor. Thank you very much. Well, coming up, we will discuss the prospects for a new ceasefire agreement in Gaza. That is next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. A U.S. negotiator says a new Gaza ceasefire deal is possible within weeks. Adam Bowler told CNN the possible agreement could even see Israel recover all hostages held by Hamas. Meanwhile, Israel says it will send negotiators to Qatar in an effort to make progress in mediated talks on a return of more hostages by Hamas. Let's go to Jerusalem and speak with Bloomberg's Dan Williams. So, Dan, what more do we know about the Gaza ceasefire deal that this U.S. negotiator, Adam Bowler, is referring to?
Well, there are very few details forthcoming. We do know that Israel plans today to send envoys to Qatar. This is one of the two Arab countries that have been mediating between the Israelis and Hamas. We know that it's now been 8 days since the truce that was in place expired as scheduled, and Israel has been gradually ramping up pressure on Hamas, on Gaza, in order to focus the minds of Hamas. I think Israel is hoping that this will remind Hamas that this is not a status quo ante. This will not be a limbo situation as far as Israel is concerned. The Israelis began with stopping all aid and commercial goods imports to Gaza. And as of yesterday, Israel halted part of the electricity supply to Gaza. Israel had provided a power line to a desalination plant that has now been shut down. So the Israelis, while showing some openness to these negotiations, it's hard to know whether negotiations will lead, are also stepping up pressure unilaterally.
Yeah, and Dan, we have been at this place before a few times since this conflict started. If we do see Israel, in fact, sending negotiators to Qatar, what is it they'll likely ask for and achieve?
Well, as of yesterday, when I asked an Israeli official about this, whether the decision to send these envoys reflected a sense of progress, the official said no. Israel is casting this as a response to a Qatari invitation, an Egyptian invitation. Egypt is the other mediator country, and indeed a U.S. invitation. The U.S. is now officially a mediator, having disclosed last week that it's been holding direct talks with Hamas. I think the Israelis will probably be wanting to keep a pace or ahead of whatever progress the Americans think they've made in direct talks with Hamas, something the Israelis are very unlikely to be happy about, given 3 decades of Western isolation of Hamas as a terrorist group. I think it's worth noting these ceasefire talks, whatever they may be or however they might unfold, they're really no longer about a ceasefire, essentially, even about hostages or prisoners. The talks are about Hamas. They're an existential issue, whether Hamas will continue to exist as it has for decades, a dominant armed force in the Gaza Strip, or whether, as Israel demands, with U.S. support, this deal will spell the end of Hamas rule and the end of the Hamas arsenal in the Gaza Strip. That's really the only way Israel sees of going forward here. It does have at least rhetorical US support for that. And of course, Hamas has given no indication it would give up its weaponry. It's spoken about a potential consensual ceding of some power, but there does seem to be an unbridgeable gap. So really, when everyone talks about these talks, the real question is, what will the future hold for Hamas, and will it be consensual if there is an agreement, or will it be as a result of a resumed Israeli offensive to destroy Hamas, which is how Israel went to war 17 months ago after Hamas attacked it on October 7th, 2023?
Yeah, will be fascinating to see where these talks go from here. Bloomberg's Dan Williams in Jerusalem. Dan, thanks so much for joining us as always. Now, a quick check on a story we're following. A pro-Palestinian student activist at Columbia University who led anti-Israel protests last spring has been detained by immigration authorities. Mahmoud Khalil's attorney says immigration officials told her they were revoking his green card. Revoking a green card is often a lengthy legal process because the holder has already been vetted and is on the way to becoming a U.S. citizen. Now, coming up, Kenyan President William Ruto is joining hands with his political rival in a bid to calm anti-government protests. The details on that next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Mark Carney wins the race to become Canada's next prime minister ahead of a general election set to be dominated by how to deal with President Donald Trump. China's consumer inflation drops below zero. Sluggish consumption also sends core CPI negative for only the second time in more than 15 years. And Syria's government forms a committee to investigate violent attacks, which an NGO says have killed more than 1,300 people in the last 3 days. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Shimona Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. And Jen, I thought we were going to be able to make it through a couple of days of at least one show without talking about tariffs. But of course, we have another tariff deadline coming this week with the potential imposition of steel and aluminium tariffs on Wednesday. So we can't escape from Trump's favorite word in the dictionary.
No, Jumana, I'm going to make a prediction that maybe it's going to be the word of 2025. I think we're going to use it all year. That's just my prediction there. We'll see by the end of the year. But let's just take a look. I know. I should get Webster's Dictionary to pay me for that. Anyway, let's just take a look at where markets are positioned ahead of the trading day. As we mentioned, it was quite a busy week last week and shaping up to be quite a busy one geopolitically, but then also for investors to pay attention to. If we take a look at U.S. equity futures, starting off in the negative right now, S&P futures down just over 0.4% there. And that is happening after we did see the indice coming off its worst week since September. Amid, as Jumana was just saying there, a lot of the whipsawing for markets with that tariff news. And that also, as concerns continue to grow over the health of the U.S. economy. Treasuries, though, if we take a look at the U.S. 10-year yield right now, yields the base backing off ever so slightly right now at 4.28% there. There's a lot of concern, again, about the growth of the economy, even though we are hearing President Trump saying that the economy in the U.S. faces a period of transition. But bets for more Fed rate cuts are increasing, even though we are hearing from Jerome Powell on Friday saying he's not in a hurry to change policy. Euro dollar is in focus right now after we did see the euro have its best week since March of 2009. Though if we take a look at the euro right now, largely unchanged right now at 1.08 right there. Our MLive team, though, suggesting potentially it may be difficult for the currency to sustain a lot of the strength that we did see last week. A lot of focus is going to be on the fiscal commitments, if we do see them, from EU finance ministers, as we were speaking to our guest about earlier. And finally, Brent crude down nearly 0.7% there, below the $70 a barrel mark at 69.87 there. But this week, we are waiting for a number of the major forecasters to come out with their expectations for the market, the IEA, OPEC, and the EIA. So we'll see what that means for oil. And a quick look at our terminal chart, as I mentioned, concerns about global growth growth, now leading the New York Fed's recession probability model to hit the third highest peak in more than 4 years. Potentially then that is indicating a high chance a U.S. recession will come in the third quarter of this year. We will wait to see how that pans out. But let's check in on how markets in Asia are faring. Avril Hong has been watching that for us, and she's standing by in our Singapore studio. Avril, what have you got your eye on?
Well, I think it's the word of the year potentially, right, about these tariffs. I think that's weighing on Chinese assets. I mean, you're seeing how China is engaging in retaliatory action, not just on the US, but on Canada as well. And against this backdrop, we are getting these data points which show deflationary pressures persist in the country. Domestic demand, that's still looking weak, even in the face of external pressure. So that's being reflected in the decline slightly on the renminbi today against the greenback. Some of this has got to do with the PBOC's fix today coming weaker than from the prior session. We're also seeing Chinese stocks lower today. Now, I just highlight as well, before we talk further about equities in China, that the Chinese bonds have continued to decline. This is despite weak economic data. So this is also against the backdrop, keep in mind, of the PBOC's governor's comments from last week and that suggestion that, yes, there is space for policy easing, but there's some uncertainty about the timing. At an appropriate time were Pang Gongsheng's words. So keep in mind that's reflected in the declines in the Chinese bonds. For the board, take a look at the Chinese stocks. The key level we're watching today is 24,000 on the Hang Seng. This chart, courtesy of MLive's Mark Cranfield, shows you there was a strong rebound last week, and the moves lower today show you that something of a blow-off top pattern is emerging. If we get confirmation of this at the close today, could be negative for Chinese stocks in the short term.
Well, I'm just smiling at the title of your chart. The Hang Seng Index needs a marvelous Monday. Instead, we got, I would say, a meager Monday. I don't know, miserable Monday. Avril, thank you so much for giving us the overview of how these indices have done. Well, China's consumer inflation has fallen below zero for the first time in 13 months, a sign the economy still faces deflationary pressures. Bloomberg's China correspondent Min Lo joins us from Beijing. So these numbers actually came out yesterday. I keep thinking about them as having come out this morning, but they did come out over the weekend. Just walk us through that downward surprise that we got on the inflation figures and why we are sitting at the lowest level in 13 years for these CPI headline numbers.
Yes, as you said, the Consumer Price Index and PPI both missing estimates there. And it is very weak numbers there that we are seeing. The core inflation contracting for the first time since 2021 and only the second time in about 15 years. A big part of that is seasonal because last year, Lunar New Year fell entirely in February. So it was a very high base to work off because this year's Lunar New Year fell in late January until early February. So you can see that food prices had dropped by 3.3%. That weighed on the entire index. But if you just take out that volatile food and energy prices, the core inflation was still contracting. And here you can see some of the categories that are shown on the screen, pretty much a negative for most categories, including household items, transport, recreation and education. And this is despite the government subsidy so far to support the purchases of equipment, household appliances, for example. The PPI is down for the 29th straight month. Question is when we are going to move towards positive territory. And of course, it underscores how important it is for the government to double down on boosting domestic consumption. How they are going to do that, we're still waiting for more details from that government action plan that is supposed to be unveiled in the coming weeks.
Yeah, one of the takeaways from the NPC is that they have set a CPI target for 2% this year. Given that the numbers have just come in at negative 0.7% year on year, how feasible is it for them to actually achieve those targets?
Yes, so as you said, we are pretty far from the target of 2%, and that target is largely still seen as a ceiling rather than a floor. But most analysts are seeing this as a positive sign that the government is, in fact, acknowledging that deflation is happening, and that's why they lowered their target from that 3% last year to 2% this year. Of course, boosting domestic consumption has been elevated to the top #1 priority of the government. The government saying that they are going to raise medical benefits and pension for rural residents by about 20 to 30 yuan. That's about $2 to $4. So pretty meager there, but perhaps still will have a little bit of impact maybe on residents feeling that maybe they don't need to keep as much precautionary savings as before. But of course, the government said that there is this big government action plan. The details are not yet fleshed out. That was flagged at the press briefing last week. So investors still anxious to hear more about what that plan is. Is there going to be anything more beyond that equipment upgrading program, which they have doubled in scale from about 150 billion yuan last year to 300 billion yuan this year in subsidies? So let's see what else the government is doing to transfer cash to residents to get them to buy more things in the economy.
Yeah. As we keep an eye on the negative handover from Asian markets, Bloomberg's China correspondent, Min Lo. Thank you.
Let's turn to the African region now. Kenya's President William Ruto has signed a power-sharing agreement with opposition leader Raila Odinga. This comes months after deadly anti-government protests and could see the establishment of the post of Prime Minister. Bloomberg's Ndiro Oganga joins us for more. So, Ndiro, this would be unthinkable just a few years ago. What more do we know about this agreement and what was decided?
Hi, Jen. So President William Ruto says this accord is meant to bring Kenyans together and also try and address some of the systemic issues that have been plaguing the country. They intend to lower the cost of living, create jobs for the youth, and also tackle corruption. But if you listen keenly across the country, bread and butter issues still ring very loud. Despite the fact that inflation is low, 3.3%, basic goods, particularly food, is still a pain point for very many Kenyans. Some of them are also dissatisfied with the state of public service. There was a total overhaul of the National Healthcare Insurance Scheme, and this has left healthcare in a state of disarray. Kenya is also in high risk of debt distress, and they're currently in conversation with the IMF trying to secure a new program after their current 3.6 billion program expires or ends come April. The country now is looking forward to some form of political stability, according to President William Ruto, because on the 25th of June, there were deadly protests that left 60 people dead, forced the government to call back the taxes they had proposed, and also Ruto leaned in on Raila, tapping 5 of his key allies and bringing them into government.
Ndiro, this isn't exactly sitting well with a lot of Kenyans, at least if you take a look at X. How likely is it, though, that this could lead to more unification in the country and potentially a calming of tensions?
Jen, while it's not sitting well with many people, it's not surprising. Kenyans most of the time always retrieve to their tribal cocoons during political seasons. And last year, President William Ruto fell out with his deputy, Rigathi Gachagua. So this was one of the things that he was going to try to do. And what it's going to do, it's going to open him up to Raila's staff of very loyal supporters. It's also going to buy him some support in Parliament, particularly when they're trying to introduce new tax measures to try and raise revenue, despite the fact that taxes have been very unpopular amongst the people. But there's also something to be said about Kenyans themselves. June 25th was very monumental. Something ticked in the populace. Now they're very keen on policy interpretation and implementation. And even though the president will be beginning a tour to try and popularize this accord, Kenyans are very alert, very awake, and they're only focused on things that bring growth and development in the country.
Bloomberg's Ndiro Oganga in Kigali for us. Ndiro, thanks as always for joining us and for your reporting. Now, sticking in the region, Bloomberg understands that a decision on a disbursement by the World Bank-linked climate investment funds may be made as early as Friday. The move would trigger a $2.6 billion green finance package for South Africa. It comes after the U.S. notified the country that it was canceling money it pledged to a separate climate pact. Joining us is Bloomberg's Anthony Squazine, a senior reporter here. Anthony, talk to us about how much finance South Africa has potentially lost as a result of this pullback. And is this really a part of a wider trend? I know you've been covering this for quite some time.
Yes, thanks. South Africa's already lost $1 billion, part of the Just Energy Transition Package. The US pulled out. They let the government know on February 28th. We only actually found out about a few days later. And at the same time, we're now seeing another $2.6 billion hanging in the balance. Now, that's not all US money, but the US is one of the biggest contributors to the climate investment funds, and they do have a veto. So there's going to be a $500 million distribution to South Africa, or disbursement, if they get the go-ahead, and that would trigger another $2.1 billion in associated finance. So if the US vetoes that, South Africa will lose 2.6 plus the 1 billion is 3.6. Now, it's not something necessarily targeted at South Africa. The US has pulled back from a number of climate initiatives. They pulled $4 billion in pledges from the Green Climate Fund, and they've generally, Donald Trump's administration has been railing against climate finance globally. They've also pulled out of similar pacts in Vietnam and Indonesia that were much more earlier stage, but the US was pretty crucial in those. So there's a possibility those could also collapse.
What does this mean, Anthony, then, for South Africa's transition away from coal?
Well, it makes it more difficult. It's not debilitating. The government can still proceed with its plan to transition away from coal, but losing as much as $3.6 billion means there's a lot less money to build our transmission lines, which are essential for the addition of renewable energy to the grid, because South Africa's grid is very much centered around the coal fields and not in the west of the country where all the solar and wind power is. So it's a big problem, and the government is going to have to look very hard to find finance from either commercial sources or other donor countries and to try and keep their program on track.
Bloomberg's Anthony Squizine there in Johannesburg for us. Anthony, thanks so much for joining us. Now, coming up, a surge in interest in artificial intelligence is set to boost IPO activity in Abu Dhabi. The details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. A surge in interest in AI is set to boost IPO activity in Abu Dhabi. Bloomberg understands ADNOC and Presight AI have held early-stage talks about potentially reviving plans to list their artificial intelligence joint venture. Let's get more with Bloomberg's Laura Gardner-Cuesta. So this is potentially very interesting and also just speaks to Abu Dhabi's listing ambitions and the growth of capital markets here. But what do we know specifically about AIQ?
So AIQ is a joint venture, like you said, between ADNOC and Presight. They previously explored plans to list in Abu Dhabi a couple of years ago. They've revived these plans now on the back of course, like massive interest in AI. So what AIQ does, they try to apply agentic AI to make the energy sector more efficient. ADNOC is one of their main customers. And so they do things like use agentic AI to really speed up seismic surveys, which can take months. Now they can take days, things like well drilling, etc. So it's really like applying this agentic AI to increase the speed of a lot of these data consuming
Yeah, and when
processes.
you and I have been having these chats, we've been talking about the diversification of sectors, the different companies that have showed up to list in the last couple of years. And there has been a notable evolution just in the last 5 years. AI is going to be one of those sectors that we're going to hear more and more of in the coming months, for sure. But are there any comps in the market that we can compare AIQ to?
I don't know if there are any comps for AIQ specifically, but it's true that there's a lot of interest in AI. And actually, we're expecting a listing this week of a company called Alpha Data. So they're an IT services firm in Abu Dhabi. They've seen massive growth on the back of AI as well. So I think it's definitely a theme, like you said, for the coming months.
When we were discussing the broader IPO landscape for 2024, one thing you told me that stuck out to me was Saudi Arabia saw the most number of listings, but by volume, Abu Dhabi saw more listings. What does the outlook look like for 2025?
I think the UAE, so far, we've only seen this one small listing from Alpha Data. We know there's a few big state-backed IPOs that are coming, so Etihad, a couple of Dubai-backed listings. But in Riyadh, it seems there's still quite a few, like a large pipeline. The thing is, I think IPOs will be a bit smaller there because a lot of them are private sector, sort of family-owned businesses coming to list. But there's still like a big pipeline in Saudi Arabia for sure.
Yeah.
So.
Bloomberg's Laura Gardner-Cuesta, thank you so much for that overview. We'll keep an eye out for what happens with AIQ. Well, Bloomberg understands that Saudi Arabia is cutting oil prices for buyers in Asia, its largest market. According to a price list seen by Bloomberg, the state producer will lower Arab Light crude prices by 40 cents a barrel. The first reduction in 3 months comes after OPEC Plus agreed to begin reviving halted oil output next month. And of course, the backdrop is lower oil prices. Oil prices down about 9% just in the last month. And coming up, China's next DeepSeek might be just around the corner. More on Beijing's big AI push next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Shifting focus to China, there's a new AI tool named Manus that some are calling another DeepSeek moment.
While other AI stops at generating ideas, Manus delivers results. We see it as the next paradigm of human-machine collaboration and potentially a glimpse into AGI.
Let's get more with our tech reporter, Annabelle Druller. So, Annabelle, who exactly is behind Manus? What can it do, and why is it causing such a stir right now?
Yeah, that's right. I mean, it's only been released in the last 4 days or so, and it's certainly generating a lot of hype online. So we can get to maybe more of what the tool can do first. So this is called Manus, as you said. Its access is a little bit limited right now, so it's still in the beta phase. So it means that the product is functional, but there still can be a few glitches. But this is what they're calling a generative, or general rather, AI agent. So it's important to make the distinction here between this Manus tool versus sort of a regular chatbot like ChatGPT, for instance, which is more human-led, where humans put in text prompts and then you get that response. This is about agentic AI, and so it's essentially where you have AI that has the capabilities to act autonomously, to make decisions with certain inputs. And so this is what Manus is saying it can do. It lays out a lot of different use cases on its website, so things like screening multiple job applicants, analyzing financial statements, even proposing where you should live, if you can give it things like salary or your capacity to pay, things that you might need, like childcare, for instance, in the region. So they're saying that really this is the next step of what AI can do. And this is, again, stepping back, was seen as one of the broader trends for AI in 2025, agentic AI. What is also really interesting, though, as you said, who's behind this? It's a group of Chinese developers, and so it's really putting that tech competition between the US and China in focus, because essentially Manus is saying that they can outperform OpenAI's advanced AI agent Deep Research. So it's really that race between Beijing and Washington when it comes to tech and AI in particular.
Are there still limitations, though, Annabelle, when it comes to Manus and what it can actually do?
I think that the limitations that we see so far, it's really more about, I guess, the access at this point. As I said, it's in the beta phase, and so that means that it's not available to everyone. You need to have either an access code or some sort of invitation. And so lots of people actually haven't been able to use it yet. The people that have been able to use it, there have been a number of glitches that you might expect, again, because it's in that beta phase, but reported online. So things like Manus crashing, giving inaccurate information or responses. And so this is what I guess the company is saying is still part of the learning phase. There is a Discord channel that you can follow, and there are certainly a lot of followers, around 150,000 people that are waiting for more updates on this. But as I said, not fully open to the public just yet.
Fascinating stuff. Annabelle Druller is for us. Annabelle, thanks so much.
Yeah, our friend Manus Carney and regular viewers of the show would know that name very well. We'd be quite happy to hear that he's become an AI sensation over in China, Jen. Okay, a quick look at markets as we head into the beginning of the trading week. A bit of a risk-off tone prevailing. S&P futures dipping towards the red, down 0.6. NASDAQ also down 0.7. Looking ahead, we've got the CPI print to watch out for on Wednesday, but then also all new tariffs as well on steel and aluminium are supposedly kicking in this week. But of course, as we know, anything may change. But that's a big determinant of market sentiment. And then Euro stocks continuing on with their positive price action from last week, the only bit of green that we have on the board today. That is it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.